Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. As a quick reminder, I will be appearing on BNN Market Call this coming Monday at 12 noon to talk stocks in the market. It's too late to send in a question, but you won't want to miss it because the market is at a very important inflection point. And what happens next will determine where we go in this seesaw market. Now, if you're watching this after my appearance on BNN, I remind you that if you want a better insight into our view of the market and stocks, you can sign up for a 3-month trial of our service by going to www.strategicanalysis.ca pricing, where you can gain access to our entire suite of investment valuation services at a reduced rate. This offer will not last forever, so join us today. Before I say anything about the 8 FANG stocks that we track every week on FANG Friday, I have to stop here and advise you that the stock market, as exemplified by the Standard & Poor's 500, is almost perfectly right at a key breakpoint, its super growth price, or 3.5 times book. It is therefore either getting ready to break out or it's at an intermediate top. The Canadian market, as exemplified by the TSX, may already have broken out very slightly or is extremely close to doing so. I would like to see the supporting balance sheets to seal the deal, as it were. So I can't be too pedantic on this call yet, but as I have observed many times, the fair market values of the TSX are strong and positive, and the index is cheap compared to the US. Now, how cheap is cheap? Well, the TSX is trading at 1.5 times book, and the S&P 500 is trading at 3.5 times book, and the NASDAQ 100 is trading at more than 6.9 times book. What is so interesting right at this very moment is that the last time, just a short time ago, you may remember, that the S&P and the TSX reached these exact same valuations. They both tried on 4 successive days to break out and failed each time before the market then set back. So, if you want some tension in your life, this is one of those perfect fill or kill times in the market. And I have to say that I do not have the faintest idea which way things will go. If we bust out, there should be a good across-the-board upside potential, and one would want to be well invested. If the markets fail to break out, you would want to be defensively structured. So today, we will take a close look at the FANGs and see if they will be trying to give us a clue. There are 3 things which I should draw to your attention. First, I want to see what the first quarter has brought. And that information is virtually here. Second, I need to see the balance sheets of not only the FANGs, but also the broader market to verify the precision of the current SVA breakpoints. And third, of course, we all want to know how the boys are doing. Now, before we take a close look at those FANGs and what's been going on, as always, I'd like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. I will remind you that we are almost at 2,000 subscribers, so it will help if you could help us get over that milestone. Okay, turning to the FANGs, and let's start off with Meta, which just continues, I think, to soldier on higher and higher. Okay, we have seen that collapse of its fair market value, but it's now rebounding back, or the expectation is rebounding back. And of course, if it can get back to its trend, which it had for a number of years, then there is still some distance to go here. NVIDIA has look at NVIDIA. It got up to its HB5, that's 26 times book value, broke over, and has just been kind of floating along the HB5. It has, by the way, given us a buy signal. It's the 3% 5-day rule, as you can clearly see. And the question is, can it now rally up to its HB6 price, which is a high on the stock going back for 23 years. Netflix, perfect hit, as I expected, at its bubble price, set back to its mid-super growth price, and has rallied from here. It's now been trading somewhat indecisively. Now there is, look at that nice bounce there in the forecast fair market value, but I think the market needs to see just how good this quarter is and what the guidance of management might well be. Tesla has been dithering on either side of its HB2, which is 12 times book value. It had broken out nicely, then broke back down below the HB2, gave a confirmed sell signal, that 3% 5-day rule, then promptly broke back out again and gave us another 3% 5-day rule buy. Well, we had barely got that under our belt when the stock has broken down once again. So this is very, very indecisive trading, and it probably is going to need a strong market to maybe move the stock back on side again. Amazon, well, we had that perfect hit at its bubble price as expected, and then a setback. Now, we never got a buy signal again. It did not fall back to its MSG price, which, by the way, would be a more than 30-year low for the stock. Note, of course, that the stepping stone trend of the fair market value, it has rebounded a little bit here based on analyst expectations, but we need to see now if this is real or not, and the first quarter will at least give us some hint. Alphabet is quite interesting. Remember, I said, look, around the MSG price, we had this trading on like on either side of the breakpoint, indecisive trading. That kind of indecisive trading typically calls for lower prices on the in the stock, and indeed, it set back at least one breakpoint plus to its LSG price. Now, note this time around, that the first time that the stock traded fairly tightly along its mid-super growth, but this time, the width of that trading band has been much wider. And to answer that question, why, we need to go back and take a long look at the stock, because you can see here that the super growth price, which has been my target all the way along for Alphabet, is actually a long time potential low for the stock. So of course, this time around, the first time it was tight. This time it's much looser here, and we are kind of wondering now if that rollover. You see the rollover. There's the fair market value now. It went up in the pandemic, but now it looks like it's rolling over. If it holds in here, the stock may well hold, and that's what the market seems to be saying. But if it continues to roll over, look for the super growth price ahead. Microsoft, same story, very much dithering on either side, and again, a fairly wide band here. But here, there is no turn down or really change in the fair market value, so it's giving us no hint whatsoever. Where's the stock going to go from here? Well, who knows, eh? And finally, Apple. And Apple, we, as usual, you know what the problem is, don't you? After all of these years, we have to keep waiting for Apple to give us its quarterly earnings and balance sheet so we can tell what direction the structural breakpoints are actually taking once we take into account all of those share buybacks. I've left it as a hold, of course, and it's done all right, but we really need that information ahead of us. Now, to sum things up, have our FANGs given us one iota of a clear clue as to what exactly is going to happen going forward from here? Nope. It looks to me as if they are likely to be trend followers rather than trend leaders, as they were from 2009 to 2020. As I personally cannot find any hints as to what we should expect from this group of stocks. Meta continues to trade confidently above its super growth price, 3.5 times the adjusted book, and our buy signal remains solidly intact. Mind you, I want to see this latest quarter to make sure that things are on tap for that hoped-for rebound in those earnings and the fair market value trend. By the way, if we go back and we take a close look at my stock chart, you can tell, going back to April of 2022, the stock reported on April the 24th, and the year previous to that, the company reported on April the 29th. So unfortunately, we still have maybe a couple of weeks to go before we're going to find out just exactly what has happened. Second, as has been the case for the past 3 years, NVIDIA has broken out over its HB5, 26 times book, where it's been holding since then, and could be heading back to its HB6 or 33 times book, which would be tied for a 23-year all-time high. But we need to watch carefully to see that it can hold here. Although I must say that the recent almost astonishing continuing strength in cryptocurrencies may help to push it there. As far as Netflix is concerned, following my sell at the bubble price in February, the stock fell right to its MSG price, 5.5 times book, has joined a nice little pop. For the long-term investors in the crowd, I am not totally optimistic that the setback from the bubble price is over and done. But I wait the first quarter with interest to see how the shares hold up. Looking at Tesla, 5 weeks ago, we saw that Tesla had a technical breakdown below its HB2, or 12 times book, and held there just long enough to give me a confirmed breakdown signal using our 3% 5-day rule. Then, the minute the market gave that confirmed sell signal for the stock, it did an about face and broke out and up once again. Talk about indecisive trading. Finally, last Wednesday, and up until this week, the stock looks as if maybe it's trying to break back lower again. Well, you remember what this is, don't you? I call it sloppy or indecisive trading. It usually leads to lower prices ahead, but I think we need to wait and see what this quarter brings and what its new balance sheet actually shows. Amazon continues its modest rally, but if history tells me anything, it should continue to slip back to its MSG price, its very long-term low. The question is that miserable earnings fair market value trend for real? In which case, a lot of caution is required here. Or will all those layoffs, are they a harbinger of a rebound in earnings and reinvigorate the stock? Alphabet and Microsoft have continued to dither on either side of the recent breakpoints, and for some time, what I refer to as indecisive or sloppy trading. Both have broken to the upside recently. Both have been a little bit toppy very lately. However, this current quarter may help provide some resolution as to which direction both those shares may ultimately take. As for Apple, as usual, I really want to see their new balance sheet, although I know that the company has been quite active in buying back stock this quarter. Perhaps the guesstimated HB6 price, that's 33 times book, will prove to be support, but there is no rush to make any hard decisions right here and now. So I will continue to put it down as a hold and wait and see. I will finish off by reminding you that unless or until the S&P is actually able to break out over its super growth price, I would treat any exposure to the NASDAQ stocks with considerable caution. The NASDAQ 100 itself has a fair way to go before it could render a buy signal. So I have to repeat that for this index, we are seeing a rally only. To remind you, I'm scheduled to appear on BNN on Monday, April the 17th. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week. Well, actually, hopefully, I will see you on Monday.